Hey guys, welcome back to the channel. Jeremy and Lily here. As you know, I've created a passive income stream of over $55,000 a month in rental property income. My portfolio is worth over $7.5 million. I bought 1 to 4 houses a year while working a full-time job, and on our channel we're going to teach you how you can do it too. So my last video was a reaction to a housing crash video. After doing that video, I wanted to look up some more market forces that have an impact on supply and demand. So in this video we'll take a quick look at home sales, but we'll also look to see what's impacting demand, such as interest rates, new mortgage applications, lumber, and then on the supply side we'll look at the current inventory, we'll look at the housing starts, and we'll talk about some other factors that impact supply. We'll look to see which direction each of these market forces are going and how that impacts prices. Every time you smash the like button and leave a comment, you'll be entered to win a pair of Apple AirPod Pros that Lily's giving away to one of our first 1,000 subscribers. We post weekly, so don't forget to hit the notification bell so you'll know when the next video is out. Although I'm a licensed CPA and have 3 business degrees, I'm just a guy on YouTube, so please be sure to consult your professionals before making any investment decisions. So let's take a quick look at sales to see what's going on. So if we look at this chart from the Federal Reserve economic data, you can see that sales actually peaked in January and they've been coming down for the past 4 months. Now that's for existing home sales. If we go look at new single-family homes, you can see the same thing. Again, they peaked in January and they've been coming down ever since. Just looking at these two charts, you can start to get a feel for where things are cooling off. Next, I've got a couple of charts from Redfin, and they're just looking at the latest 4-week period that they have, ending in June 21st. And you can kind of see it start to dip down there. What's interesting on the bottom chart is it's showing you that the decrease is happening much faster this year than it did last year. Again, another sign that things are cooling down. The next chart is on pending sales. And so this is a leading indicator of what we're going to see sales-wise over the next, say, month or so. So you see these cooling down as well, and they also had a very rapid decrease relative to last year. So they're kind of falling off a lot quicker than they did this time last year. Again, signs the market's kind of cooling down. Here's another chart from the Fed data, and it's showing median sales price. This is definitely coming down. It looks like it peaked in about 4th quarter of 2020. Okay, so that was what's happening. Now let's look under the covers to look at supply and demand a minute to see what market forces are causing these things. All right, so the first thing we want to look at is interest rates. So as of July 8th, you still see 30-year mortgages sub 3% and 15-year mortgages at 2.2. And this is incredible. And these are holding pretty flat over the last several months, you see here. This is the one big thing that really caused all this to happen. Everybody thinks COVID just caused this housing bubble. COVID didn't cause the housing bubble directly. The low interest rates caused the housing bubble. To stimulate the economy, the Federal Reserve dropped the interest rates significantly to about a 50-year low. They're the folks that loan the money to the banks that then loan money to the consumers. And currently, they're loaning money to the banks at 0%. And Fed Chairman Jerome Powell promised to leave rates alone for the duration of 2021 and 2022. He recently mentioned he may have to raise those up a little sooner than later, but it looks like rates are going to be low throughout 2020-21 and most of next year, if not all. That's the one market force that continues to keep prices up. The reason behind that is that people buy houses on monthly payments. They don't typically pay with cash. And so drops in interest rates reduce monthly payments massively. Speaking of affordability, this is a page out of a presentation I found on Zillow's group where their chief economist presented this to a national economics club in July. And what was neat about this is showing you how much more affordable that home mortgages are today. A mortgage is currently only consuming about 17% of a household's income, where if you're renting, it's consuming more about 30% of your income. Problem is, a lot of people can't qualify for that loan. And that's where real estate investors like you and I come into play. When people apply for my houses through the Zillow rental manager, it actually calculates their affordability into their application for me. Stay tuned for a future video I'm going to do on rent increases soon. All right, so the next market force that affects housing prices that I want to talk about is new mortgage applications. So check out this 1-year chart. You can see a gradual decrease in the number of applications. Again, this is a leading indicator. So this is very current data as of July 21st, and these people will be closing on these mortgages over the next, say, 30 or 45 days. But a clear indication of a cooling off. You can really see a decrease starting around January of 2021 and steadily kind of coming down since then. This is going to relieve upside pressure on prices. So here's a 2-year chart, and you can see that it looks like we're getting about back to normal. And then looking at a 5-year view, you can clearly see it trending down. You can see it's not a massive spike. Right, so we're down in this area, so maybe a little above the average, maybe around the average, right? Again, new mortgage applications. All right, the next one on the demand side, something impacts how much people want them, right, is the price. and lumber and building materials have been skyrocketing, particularly lumber. So over the last month or so, there's been a massive decrease after a huge spike. This is a really great chart. It's showing that, after lumber prices went up 3 or 4 times, they've come back down just as quickly. And this data is as of July the 12th. So lumber peaked about May 5th, 2021, and it's been falling ever since. And it's now below the August 2020 prices. Now remember, these are lumber futures. It'll take a little bit of time for the supply to get into the local stores. But this is great news for buyers because it's going to take some pressure off on the prices and help them come down. All right, so let's take a look at the supply side. The news keeps talking about the massive housing shortage. Let's take a look. All right, so another chart by the Federal Reserve looking at the housing supply. So these are houses for sale. Looking at a 5-year chart, we can see that it bottomed around July of 2020, and it's been going up significantly since then. But I would say if you look at this, it's really getting close to the 5-year average. It's not like it's fallen off a cliff and stayed there. There's been a lot of progress over the last several months. So now that this is back up to around normal or getting there, it should really be good for buyers to relieve that pressure on any price increases. Okay, so another chart from the Federal Reserve on starts, new housing starts. You hear in the news about housing shortages and not enough. You see a massive increase here, and we're way above the average. So builders are building like never before. So buyers are kind of cooling off, but builders are still betting on those buyers being there. As these homes come onto the market over the next 6, 12, and 18 months and they're completed, that's going to continue to lower the pressure on any price increases and be great for buyers. It's also something builders have to be careful with so they don't get caught holding the bag if prices actually start to come down. Here's a cool chart from the National Association of Realtors on housing shortages. And so obviously in markets that are having a lot of growth, you'll have some shortages, and that's just a natural fluctuation in markets. On this chart, they're only measuring major metropolitan areas, which are the ones that are going to have those increases. The rest of this map is in smaller areas. They probably don't have a shortage. So if this chart were color-coded completely, you would see very little red or orange on this chart. All right, so what are all these market indicators telling us? We saw that home prices are decreasing. We also saw the median sales price come down. Interest rates, which is the big thing that's causing this, is actually pretty flat over the last several months. And out of all these indicators, that's actually the only one that's putting upside pressure on prices. We looked at mortgage applications and they were actually down. That's going to help to soften prices. We looked at lumber, that's coming down significantly. That's going to soften prices. The housing supply is actually increasing. That's going to soften prices. The housing starts increasing, soften prices. On the supply side, there's a few more things coming. The foreclosure moratorium ends at the end of July. As all these pent-up foreclosures start to happen, that's going to increase the housing supply and relieve some pressure on housing prices. The eviction moratorium is coming to an end at the end of July also. I think there's probably a lot of landlords that are sick of being a landlord or have wanted to sell for other reasons. Maybe they're retiring or they want to sell their properties and trade for another one and so on. As we work through some of those evictions, I feel like we're probably going to see some additional inventory introduced, which is also going to relieve prices. And then mortgage forbearance. When homeowners and landlords have to start paying their mortgage again after not doing so for some time, some of them may not be able to, which could cause more foreclosures, again introducing some additional inventory onto the market, just helping to relieve pricing pressures as well. So if we look at all these indicators, there's really only one that's continuing to keep prices firm, and that's interest rates. I think we're really just in a recession, and the Federal Reserve is using this tactic by making money cheap and propping up things like housing and causing massive inflation that we're already beginning to see. So what do I think is going to happen to housing prices? Since the Fed's going to keep the interest rates flat for a while, I think we're going to see these price increases taper off and flatten out. They could come down a little bit. I don't see any kind of crash happening, especially with the interest rates. I'm also putting my money where my mouth is. I've been buying a property every quarter for the last couple of years, and I continue to keep that up. So if you've got a house and you were thinking of selling it, now is the time. Don't wait. You're going to be fine. Just go ahead and get it done. In that Zillow presentation from which I showed you a slide earlier, at the very end of it, here's their prediction on what's going to happen. Zillow's chief economist expects prices to peak in the fourth quarter of 2021. And then they're estimating that they just cool off, they don't free fall, and I agree with this. Please let us know in the comments what you think is going to happen. Oh, and don't forget to smash the like button if you enjoyed this video. Thank you for your support, and we'll see you next week.